What's up, everybody? Ted here, Bodies and Wicks. Quick follow-up from yesterday. Um, I just wanted to go back over what we were talking about with Monero and the effects that it had, or even if it had any effects, or if you were going to trade it, or if you weren't going to trade it, or whatever you were going to do. Let's just take a look at it and see what happened. All right. So again, come at this from a smart money perspective. So, no trend lines, no triangles, no nothing that could be perceived anything as retail. But as you can see, this was the 4-hour fair value gap that we had. Alright, so we do, sorry about that. 4-hour fair value gap, and that's when, again, yesterday, when we were getting close up to here, I was saying this was acting bullish and that we should push through this fair value gap. And the reason I thought that was because we hit it once, fell back, right, and then continued onward. And these tails that the price action left behind were basically were rebalancing. You know, it would, even though it would move up, it would move down. It would move up and move down. So it was rebalancing each time that it was getting closer and closer to the fair value gap. And I'm not for sure exactly where I cut it off, but I think it was right after we got above. Yeah, I think it was right after we got above the high, because I said I would expect it to fall back after that, because then people would consider that the resistance area, right? So that's exactly what it did. Fell back. Everybody thought it was the resistance area. So what did everybody do? Chased it. Everybody chased it as it sold off. And if you knew, as I did, that it was going to actually buy instead, find the goal first. Actually, we could probably go back to the 4-hour and find out where it was going to buy. Yeah, right here. So here you have your order block, your bullish order block. So another down move before an up move, and the up move overtakes, or actually crosses, the body of the bearish candle. So it wouldn't necessarily, I mean, I guess you could call it an engulfing candle. Doesn't necessarily have to be an engulfing candle. Just make sure that the candle, the body of this candle is higher than the body of this candle. That's for sure. And then once that happens, and the close happens, then you have another bearish move, or bullish move. Sorry. So that's when it comes up, and then so when it comes back down to this area, that's when you expect another bullish move, because you expect, it's just part of the algorithm. Don't know how to explain it, but it's just part of the algorithm. Whenever you get a bullish order block that is created, the next time that the price reaches down into it, you want it to reject as soon as it touches that price. Even if it touches the wick, usually it gets down into the body, right on top of. Let me see what the low is here, and what the close is, or the open is on that candle. So we got the low here of, what does that say, 233.23, and then the open of this candle, 230.51. Is that right? So you have a little bit of space here, so it's still close enough to where the wick still plays a part in this, to where this whole candle is actually considered the bullish order block. But generally, if it's going to make any kind of turnaround, it's going to happen within the first half of the volume, or the first half of the candle, up to the body. If it gets below the body of the candle, then more than likely it's going to start going lower. It's just part of the algorithm. Studying it long enough, I feel like I should know that. So that's just the narrative, that goes along with it. So after this fell back down, I was waiting. I expected it to at least touch the candle, even though it didn't. I still did get another entry on this wick here, and then took off. Let me see here. The hardest part was watching this over here, because I was waiting. I was trying to see if it was going to do one of two things, right? So watching this, right, which would have been the kind of a bearish breaker. So that would be your last down candle. And it's kind of both in one, actually. So it could be a bearish breaker. It could also be a bearish order block at the same time. So I was waiting to see if it was going to hit the breaker / order block and then turn around, or if it was actually going to try to come up a little bit higher and then come up into this fair value gap here that we have just above it, and try to enter that. So I waited. It came up, it touched it, and then of course it came up and it tried again, and I still held on to it. And then after it started coming back down, that's when I let go of most of my position. I'm still holding on to a very, very small portion, but still talking about when to get in, when to get out, and when to understand when it turned bullish. And like I said, it got up into the fair value gap. Like I said, these things are like magnets, but they're also like anti-magnets. They're detractors at the same time. As soon as they pull into it, they usually want to jump back right out. And that's true, so it just did that. But then again, it kept pulling toward it. So that told me that it was bullish. And then once I saw this come up and this fall, and again, here we go, that same kind of setup, right? Do that bullish order block. You have another one down here. It falls down into the body of this candle. That was where my first entry was. And that's why I wanted to talk about Monero yesterday, because I wanted to talk about, because I was seeing as it was going up, and I wanted to talk about the price action whenever you see these type of things, what to expect, and when to enter again. When is it appropriate to enter again, adding more leverage if you want. And so that's when I entered here again, adding more leverage. And of course, I was trying to hope for it to get up into this fair value gap. I was wanting it to get to at least halfway before I took any kind of profit, but I got that one out of the way. And then it's somewhere in here. I want to say it was, let me see, let me pull this out to the 1 hour. because this all happened this afternoon. Came up, touched it. Yep, that was this morning. Remember that. And I think it was on my lunch break, which would have probably been right around here. Yep, where I finally decided to take profits. So, not too bad. Can't complain. That was wasn't exactly right in this area. It was probably, let me get off of this here. Probably some more like a right, I think right around in here, 217. That sounds about right. I want to say it was about 217.12. And then all the way up until probably somewhere up in here. Let me look really quick. It does say 245, 245.14 on my phone. So what did I hit? 245.19. So 245.14, and I was actually at 217.25. So that's a good 12% increase, with not only just one entry that I had with a couple lots, and then a second entry up here with a couple lots. Yeah, I mean, that's all you need, and you can you need one trade, and you can live off that for a week if you have the right capacity, enough money in your account, etc., etc. And that's all it took for me. Again, I was still looking at Bitcoin and Ethereum too, but the most promising one that I saw was Monero. It was just a straight shot, and it was just too easy. Ethereum and Bitcoin had kind of been a little bit unpredictable. Although Ethereum is looking like it's reaching a little bit higher and higher. I'm hoping I'm thinking it'll at least breach that last high we had here at 24.32. If not, it'll get close, I think, tonight. And then with Bitcoin, I've been wanting it to get to 4130, 41330. But it's just kind of doing its own thing. It's been sideways. So, but what I drew just now was the order block for their mitigation block. Actually, could possibly be an order block depending on how it goes this way. But right now, again, any type of block, this could also be a well, like I said, it's definitely an order block, because if you put these two the two bullish candles together, make it one candle, it outgrows the down candle. So therefore it turns it into a order block or mitigation block. Kind of about the same thing right here in the middle of the chart. So you would hope that once it comes down and touches it, you want to see it spring out pretty quickly. If it doesn't, that's fine. What you don't want to see it do is actually cross below here, or at least cross below here with a lot of force. And generally what will happen is it'll get down to the bottom, and then that's when you want to put in, from my experience and my opinion, from what I have done in the past, that's where I've put in my lots, or at least put in a little bit of lots, and then also put a buy stop or a market limit, whatever you want to call it, whatever it's called, on whatever platform you're using. That way, when it crosses this way, and it goes above the threshold of here, then you're going to be in a bullish environment again, and it should start moving upwards. So we'll see if Bitcoin does that or not. So, and then Ethereum, again, hoping to get above here. Not crossing my fingers for that, but also drew a fair value gap instead of any kind of order block or whatnot. Even though the order block is right here, the bullish order block, it's pretty much at the bottom of the gap of the fair value gap. So once it reaches down into the fair value gap, it should again, as it was from Monero, as soon as it reaches in, it should jump back out, which it did. And so Ethereum, same way, we have a fair value gap. As soon as it goes out, comes back in, should jump right back out, and then it didn't cross. It crossed a previous high. It didn't cross the current high. So if we stretch this and we go back, that is going to, if it'll actually go back there. There we go. It goes back to this high. So it did break that threshold. It just didn't break the current high. But the reason it did that is because I believe there is a negative order block also in this. So you have to take a look at this one too to see what's in here. Oh no, it may have just been halfway through. Okay, so in this case, and I'm in the 5-minute chart, so I'm really digging in deep. So here, go about, put a fib on it. Generally, it'll come up about maybe halfway through into the order block sometimes, and then that's when it will start retracing. And that's what it did. And boom, exactly halfway through. So those are things you have to watch. You got an order block, comes up about halfway through, starts retracing. Don't worry, I'm sure there's going to be another order block that is going, maybe, I don't know, that's a little bit too much of a little one with the wick, but then again, it is the only kind of turning point. It also kind of lines up with this one too, that went into the fair value gap and jumped out. So we could see it come down, bounce up, and then continue on. And yeah, that's what I got for you. So that's the kind of price action you should look for. The kind of hints and tips I'm giving you as far as bearish and bullish order blocks. How far do they go into them? Like I said, halfway points are always a good way. Like this one probably just went a little bit more than halfway, but that's fine. It didn't go all the way bottom, didn't go through the bottom, but it did get about halfway and jumps out, right? And comes up halfway through, a negative order block, coming back down, and then now we should start seeing it come back up. So, and you can generally, if you ever encounter a negative order block, it will generally almost always, have pushback against it, but it just depends on how far. I always tell people, 20-30 pips minimum. If it's gonna have a reversal, you'll definitely be able to tell. But it'll come up to an order block, it'll reject out of the order block, 20-30 pips minimum, and then we'll see what's gonna happen after that. This one doesn't look like it's gonna be a reversal. Looks like we're gonna continue on. Hopefully, we'll get Ethereum above the last old high here of Yeah, what is it? 2432, and then with Bitcoin, um, yeah, it looks like it's still hanging around in this order block area slash mitigation block. I have a feeling it's probably going to scoop down probably to the bottom and then pull back up and out. Also, another reasoning would be because that's also going to be below the 62%. It looks like this line that I landed on, as far as the bottom of this order block, exactly at the 70.5%. So if it comes down, touches the 70.5% again, wouldn't surprise me. Perfect buying opportunity for people that didn't get in the first time at this area or on their way up, and it would turn around and take off. And also, again, the whole point is mitigation. So it would be people that would have been selling right through here, especially the big bankers, and the algorithm took them the other way and they didn't realize it. They're waiting for the algorithm to come back. That way they can get out of their position that they're in and then turn that into a positive. So that's all I got for you guys today. Hope that was cool. Hope that was enough. If you learned something new, exciting, anything that could have, put some, brush the dust off your brain. Got you thinking outside the box. Made you not think so much as a retail trader, but more so as this is. It's a complete algorithm, right? This is completely controlled by an algorithm, by the elites that have control of these markets. So understand that that is the truth. And once you understand that that is the truth, this becomes more and more easier to understand and follow. And then you start thinking like them. Then you start thinking like us. Then you start thinking, hey, if I was this kind of big banker, what would I do to screw over the little guy? And then so you start thinking like that. And so it becomes easier and easier to follow along, and also make decisions, based on that. But you just also have to know and start learning all of these, little nitpick, things here and there as far as order blocks, mitigation blocks, and breaker blocks. Those things are the heart of, this, and it's understanding where they're at and what to do about them once price reaches there. So with all that being said, and I hope you took away something from this, thank you very much for watching. And what do I always say? Wear your pants. Just remember to wear your pants.